Welcome back, and joining me for a look at the equity scene is Joshua Mahony from Scope Markets. Joshua, thanks so much for joining us today. Now, it's the last day of trade for August, and I'm sure traders are breathing a sigh of relief. I mean, what a hectic month, from recession fears to rate hikes in Japan fueling that global market sell-off. Things, however, have somewhat started calming down as U.S. inflation reaffirmed bets for a rate cut come next month. Joshua, let's start there. What have you made of trade this month, and do you think some of the moves we saw earlier on were a bit over-exaggerated?
Yeah, well, the end of the month really does provide some respite for traders, because certainly as we headed into earnings season, we saw some jitters, much like we did the previous quarter. And that's because we see these sky-high valuations attached to the big tech names in particular. And there's those question marks about whether they're justified. Now, as we are now in a position, we've seen 99% of the S&P 500 having already reported, we can now safely say that the second quarter earnings season is behind us. And with that Nvidia report providing essentially the last hurdle for traders to get over. And September is going to be very different. September is going to be all about interest rate cuts from central banks across the board. And so certainly I think we can feel a little bit more positive, despite the jitters we're seeing in US tech at the moment, that September is going to be a month where we really start to see the bulls getting back in the driving seat.
I'm crossing fingers, I'm crossing toes for those rate cuts come the next few weeks. But you did mention something I want to touch on there, that is Nvidia's results. Those numbers really shot the lights out, to be quite honest. Revenue more than doubling and topping analyst expectations. But it was said that it didn't have the wow factor. What have you made of those numbers in particular, Joshua?
Well, I guess markets have grown accustomed to not only Nvidia growing, but also Nvidia doing better than estimates. It seems like they set themselves up to beat estimates time and time again, and they've done it on this occasion, and markets seemingly wanted them to beat it by even more. Some question marks around whether their projection for next year, even though better than expectations, was potentially a little bit underwhelming. Arguably, that's built on the fact that they already beat estimates this time around. So if they didn't also then raise their expectation for next year to a similarly healthy manner, then people would start pointing towards potential slowdown for the stock. But ultimately, you're talking about a company that's moving towards a new chip, the Blackwell product, moving away from the H series, and therefore that provides the basis for a whole new round of purchases from those big tech names. So I'm personally bullish for this company. I think that it's a great company. It continues to outperform, it continues to beat, and each time we see these pullbacks, it doesn't take too long before we find ourselves back into new highs.
Those AI stocks really becoming a bellwether for markets, particularly Nvidia. Let's go to something that's been doing so good over the past few weeks, the Rand. It's hit a 13-month high. It's been really rallying over the past few weeks. I mean, the last time I checked, it was at 1776. Could we be seeing more strength, considering that the Fed is moving closer to cutting those rates?
Well, look, if you're trading the US dollar against the Rand, you're going to grow quite accustomed to the idea that it keeps going up and that the Rand devalues. That has changed, and that has changed over the course of this year thus far. It looks like we could see a turning point here, and part of that comes down to what's happening in South Africa, but a lot of it comes down to the US dollar, right? We've gone through this period where we're seeing significant fear throughout the markets, people thinking higher interest rates and what's going to happen in terms of the economy as a result, what's going to happen in terms of businesses as a result. We're now entering a period where that is less pertinent. We're seeing interest rates cut. You alluded to earlier the idea of a potential recession over in the US. Whether that happens or whether it doesn't, I don't necessarily think that it's going to be a massive recession. We've already seen that 3% GDP number coming out yesterday. We've got the jobs report coming out next week, and certainly jobs are going to be absolutely key for this going forward. But whether we see some bumps in the road, I think that US dollar weakness story is here to stay, because the coming years are going to be dominated by interest rate cuts, which generally benefit those riskier assets and generally see money moving out of those havens, in particular the US dollar, that has done particularly well over the recent years.
That's right. That weaker dollar really working in the benefit of the Rand. Let's move over to some company news now. Local miners PGM miners to be precise. Those miners haven't been doing really well. This, of course, on the back of lower metal prices. Northern Platinum out with numbers today, recording an 81% plunge in earnings. Let's talk about those numbers. Take us through your reading of that.
I mean, it shouldn't necessarily be too much of a surprise, but market's seen an 8% decline for Northam in terms of today's trade. You can see a 22% decline in terms of revenues. Crucially, talking about the fact that we've seen this devaluation in the value of those PGMs, and that points towards the likeliness that they won't necessarily be investing in new mines going forward. That ultimately could be beneficial if you see many companies like this essentially curtailing their supply, and therefore down the line it makes these commodities more difficult to come by, and therefore it raises their value. But of course you've got that trading off against this move towards electrification, move away from fossil fuels, the move in terms of EVs over fossil fuel cars, and that really devalues the demand when it comes to platinum, palladium. So really, if you look at the value of this company and you overlay it with a chart or a line for platinum, it's pretty much the same thing. And so as long as the value of these underlying commodities move towards the downside or fail to reignite, you're probably going to see companies like this struggle.
Yeah. Joshua, before I let you go, can we just get your stock pick quickly?
Yeah, so mine was Coinbase. I think this is a really interesting one. I guess there's been this whole argument about if you want any sort of proxy or entry into the crypto market without actually holding the coins themselves. Generally, people might say, well, you could get into the ETFs. What I find particularly interesting for Coinbase is that when you see periods of downside in terms of, say, the likes of Bitcoin, you're likely to see significant downside in terms of Coinbase. But companies like Coinbase also make money off of that trading revenue. So volatility counts in their favor. Bearing in mind, we're just a few months beyond that latest halving event. And generally, when you're looking for periods of outperformance for crypto as a whole, you generally look towards that post-halving period. So I would say the next 12 months from a historical and cyclical perspective should benefit the likes of cryptocurrencies, and therefore you'll see Coinbase likely benefit from, if we do see that boost in terms of Bitcoin and some of the crypto assets, you see the benefit in terms of higher transaction values, but also when we see that volatility, you're also seeing increased revenues from that side of things as well.
So Coinbase, one to look out for. Joshua, thanks so much for joining us and just taking us through the day's markets action. That was Joshua Mahony from Scope Markets.